Good evening. Where are you watching from? Okay, we have discussed about the BI triangle, and I stated one of the most important internal factor, which I call the cash flow management. Okay, and I told you can't understand cash flow management without having a deep understanding of financial statement. Sorry, of financial literacy. And understanding financial literacy, we totally will be looking at what I call financial statement. And in financial statement, we'll be considering two factors. One, income statement. Two, balance sheet. Now, in the income statements, probably be talking about income and expenses. While in the balance sheet, we'll be talking about assets and liability. Now we know that asset simply means what bring money in simple term, while liability means what take money out, right? I guess it's right. It's right, I'm very sure. Okay, so now what the rich normally does, I will say it this way. The rich actually do not own any liability. Yes. Somebody say, how do I mean? Okay. Uh they purchase liability from their what we call their net worth, their net worth. So, take for instance, I own a company. Mind you, I can own a company. Yes, own a business as a cooperative. Basically, I can also own a share in a business individually. It's called in cooperative. We have two. I have what we call the C cooperative, or we have what we call the S cooperative. So individually, I can own a share in an establishment and have a net worth in that establishment. So these are the quantity of my stock. That's what I mean. And also it can be an equity. I can own a quantity. I can own a share uh, in a company. Yeah, either with the company I establish. This is what we call ultimate. We call them ultimate investors. They understand the fundamental and both the technical means of investing. So we have two type of investors. We have the technical investor and fundamental investors. I'll be talking about that. So we want to talk about financial literacy. So the rich actually use their income to purchase assets. And in the asset column, in case of better understanding, I might do it with pictures when I write on this on my handles. So what the rich does with their income is to get an asset. So if it's through their company, what they call gross income and net income. So at the end of each year revenue, they use their gross income in purchasing, in investing in other cooperative, either individually themselves or with their cooperative, their firm. So that's what happened. That's what they use the gross income to do. So when they want to purchase liability, what they does is to use the value of what the company owes in an establishment, either with their company or as a private investor in an establishment. Most of the time, it can be their worth in their own personal company, their net worth in their company, either as the value of their stock or the amount they own in that company as shareholders. I don't know if you are getting my point. So, but average persons normally use their money. Yes, they use their money, their income, they use it, they spend everything. They always say it's not enough, it's not enough. Yes, it's actually not enough. That's why there's a saving strategy. To say that you can save 1/10 of what you earn, no matter how small it is, till it gains volume, whereby you can invest it. Now, investing now is very, very simple. Yes, you can, with the invention of technology, you can get an online investment experience. Yes, that's why in running a business, what we call the specialist through your bank, your brokers, you can get you can get an accountant, you can get a legal team, a tax legal team, and a lot of that will help you in your investment journey. So I'll do just a brief. I'll do a long I'll do a more understandable one on financial literacy. Thank you.